Nikkei absolutely flat, mild weakening seen in the dollar yen.
The dollar hovers around a 2-week high.
The Nifty is below the 50-day moving average, just below the 20-day moving average. In the red now for the Nifty, in the red now for the Bank Nifty, in the red for the mid-cap index.
Piramal Enterprise, which owns 10% stake, which is 2.26 crore shares, have sold its entire 10% stake in Shriram Transport today via block deals.
The more resilient companies will start gaining market share faster and will contribute to growth. So I think it will continue to be bipolar.
These are the same auditors who have signed the Q3 accounts, and there is no significant or adverse change from Q3 to Q4.
For markets, we're down close to about 0.5%.
For 3 days straight, you basically will have all the newly elected MPs taking oath.
I don't think that we were selective in terms of putting that book out there.
Right.
Every account that was BB and below in terms of the rating found expression in that list.
You've got the market, which is under pressure, down by about 100 plus points, 110 actually, 11,712.
Okay, it's been a bad day for the market, and in fact, as we speak, the Sensex is at the lowest point of the day, and there's quite a bit of selling in mid-caps, advanced decline at 1:4. Yes, there are a couple of stocks here and there like Apollo Tyres holding out, but really, it's just one way down as far as the overall market is concerned. This is Closing Bell. I'm Anuj, and Surbhi is with me. Hi Surbhi, good afternoon.
Good afternoon, Anuj, and this is once again a decline that's happening singularly in our market. Just look at the rest of the global screen. It's mixed, but nowhere are you seeing a massive sell down around the world. Obviously, this is a market dealing with its own problems. Let's just pull up the European indices for you as well. Flat to sort of mildly positive is what you've got there on some of those screens. That was the Asian close. But Anuj, the extent of today's fall, it's building in on that last hour decline that we saw on Friday. Today, it's not just the trouble groups, not just the generications of the world. You know, you have big stocks falling, banks, Reliance, etc. So is this market getting very weak now?
There are two ways to look at it. One is that, yes, the market is weak. Remember, we've been talking about how this kind of market breadth normally leads to 400, 500 point Nifty decline. I think we've already seen about 200 if you count Friday as well. So that's one way of looking at it. The other way to look at things right now is that when you start to see selling in even the stronger stocks, that is some kind of indication of throwing in the towel. When you start to sell, where you are making money, when you start to sell the Titans of the world, the Axis Banks of the world, ICICI Banks of the world, because that's where you still have profit. So that's why you're selling them. So I think somewhere in between, perhaps, let's put it that way, this market needs to correct a bit more. I think this is the rally that started at 10,800 on the Nifty, the exit poll rally, and we went to about 12,100. I think perhaps we need to give up at least half of that on the index, and then we'll take it from there. The broader market decline is just, not stopping, Surabhi. And, today also advanced decline at 1:4. It's a bit of a, like we discussed in the morning as well, a bit of a bear market in the broader market. You can't hide from that. On the index, you were hiding in some stocks. That's no longer the case. Now we're very close to the 50-day moving average. So perhaps there will be one attempt. I think there will be one attempt to defend 11,680 on the Nifty. I think there will be one attempt to defend 30,200 on the Bank Nifty. These are the 50-day moving averages, because if they break, then, chances of a move towards the 200-day moving average also get higher. Also, what's happening is this base case that perhaps this time around you will have a pre-budget correction, and then a post-budget recovery is likely. I think normally you expect a pre-budget rally. I think what the market is perhaps this time trying to build in is a pre-budget correction, and then perhaps some recovery post-budget.
Okay, well, right now it is down and out. There is no other way of looking at it, and it's large caps, mid caps, everything included once again this afternoon. Let's see if there is any sign of buying in the last 1 hour, if somehow the bulls managed to surface. As of now, they're not visible. Here's what's lined up on Closing Bell today. It is a weekday of trade with the metal pack heading lower. Broader markets also under pressure. We'll be discussing a lot of these trends with fundamental experts SP Tulsian of sptulsian.com, Devin Choksi of KR Choksi, and Mayuresh Joshi of Angel Broking. We get you a fund manager's view as always. As the market correction continues, is it a good time to start putting stocks in your portfolio? What should your investment strategy be? And will we see a broader market recovery anytime soon? Harish Krishnan of Kotak Mutual Fund joins in. He also manages their infrastructure fund. So we'll get in an idea on that side of the market. And of course, as always, technical trading ideas coming your way with Ashwini Gujral and Mitesh Thakkar.
Okay, well, what's interesting is every time there's any attempt of recovery, that's getting sold into. If you see, even 10 minutes back, there was one attempt of recovery, but that is getting sold into right now. How should you position yourself then in this last hour of trade? We have Ashwani and Mitesh now joining us with closing strategies. Good afternoon, Ashwani. The last 1 hour has been practically in a same 30-40 point band. What's the call now for the index, and what would be your stock calls?
Well, it means that even at 11,700, there isn't significant buying. And at 11,700, HDFC Bank is getting sold, Kotak is getting sold, Bajaj Finance is getting sold. This moving average is a very deceptive thing. They work when these are small corrections. They don't work when you have seriously large corrections where, even the blue chips are getting sold and almost mauled. So my sense is that 11,500, 550 will come in, and there's a phase of denial, there's a correction, it's an uptrend, etc., etc. When all those things stop working, only then corrections end. Individual stocks right now, Mindtree is a sell with a stop of 980, target of 935. JSPL is a sell with a stop of 161, target of 150. And Orient Cement is a buy with a stop of 110, target of 118.
Okay, that's 2 sells and 1 buy on Ashwini's list. He's also counting in a metal stock. Metals, as we just told you, are actually very, very weak in today's trading action. Mitesh Thakkar is also with us, so let's get some more trades in. Good afternoon, Mitesh. On the index last hour, is there still a trade on the way down, or then are you, juicing it too much? And apart from the indices, what are the stocks you're going with?
No, we took a trade once 11,780 was broken and took a 35-point stop loss. I think that stop loss has now been trailed to 11,755. Having said that, I think the idea is that yes, a lot of stocks as well as indices are breaking key short-term averages. Also is the fact that the direction of the indicators is turning negative. So the bias would be, even if you get a bounce back or a pullback, there will be good chances of selling. So you will keep hitting support as you go down, but I think now it could be a scenario of some choppiness with downward bias, and therefore we should see lower levels from here as well. Having said that, 2 sell calls which I have right now. Bajaj Finance is a sell with a stop at 3,500, targets of 3,400, and PEL is a sell. Keep a stop just about 2051, look for targets of 1950.
Fair enough. By the way, just looking at some names, Apollo Tyres is interesting, really. That's the only stock which stands out in a weak market, up 7%. SP Tulsian of sptulsian.com and Devin Choksi of KR Choksi with us now. Good afternoon. Ms. Tulsian, I first wanted your thoughts on the deal of the morning, Piramal selling stake in Shriram Transport. Both these stocks down quite a bit. In fact, Shriram Transport is down 6%. Piramal off the lowest point of the day, but the market's worried that, why would they need to sell so much at this price? Your thoughts on both these names?
Anuj, I gave my view in the morning also, after this deal at around maybe 11 o'clock. And again, I reiterate that probably this is seen an extremely positive movement for any prospective buyer to come and invest in the Shriram Transport. Because if you really see the situation, nothing has really changed except for this selling of 10%, which has created the panic, or maybe a counter has come under pressure. If I come on the fundamentals with a book value of 800 rupees at the end of March 20, with an EPS of closer to about 120, you cannot expect a better valuation for Shriram Transport to come in. That too, when the growth in the AUM is likely to be at about 18%, while the disbursement growth for FY20 is likely to be 21 to 24%. If we go by the management commentary, which will translate into an EPS of 120 or so, and that translates into a P multiple of sub 9 and maybe book value price to book of 1.3. Now come on the uncertainty, because we have, though I was not averse to this merger of Shriram Transport and Shriram City Union as a condition precedent for allowing the Piramal Enterprises to continue as an investor in both the companies. But sometimes, you see the panic happens, maybe favorable to one company, unfavorable to another company. So I think that now this merger or creating or maybe listing Shriram Capital, which is an unlisted company being promoter of both companies, Shriram Transport and Shriram Capital, Shriram City Union Finance, will not be there. So that hangover will be behind. So yes, use this as an exit, as a buying opportunity. And in fact, we have seen Shriram Transport otherwise also, maybe because of this all expectation of merger, Piramals looking to exit, have been creating a lot of volatility, but seen share price swiftly moving up as well from the level of 1,000, 30, 40, 50 in the past to as high as 1,200, which I see the possibility of happening again. Price to be seen closer to about 1,200 in next 2 to 3 months. Come on, Piramal Enterprise. If the Piramal, you are right, if they have just got a yield of less or maybe closer to 6% and they have exited now, that means shows the pressure at their end of the liquidity or maybe the desperations, because with the aim which they have came in the company about 6-7 years back have not got achieved, and in fact now they've exited, mobilized 2,200 crore. Probably they may exit from Shriram City Union also with their 10% stake, may mobilize about 1,000 crore. So probably that throws that yes, the things are seen to be under being an NBFC and the kind of exposure Piramals have to the Lodha group, and they have been trying to monetize the Lodha debt also is giving some caution. And when you have a caution on NBFC, because as such we have been keeping the cautious view on the NBFCs and taking call only on the pedigree with a lower valuations, maybe like Indiabull Housing P multiple of 8-9, Shriram Transport P multiple of 8-9, price to book of 1.3. So extrapolating this theme, Shriram Transport qualifies a buy, while the caution continues to remain on Piramal Enterprise, looking to their urgency or desperation of exiting from the Shriram Group stocks, which otherwise they have been holding for 6-7 years.
Okay, so view on the big deal, 10% equity changing hands in the morning itself. By the way, there are some interesting stocks on the move. Check out, let's say, a South Indian bank in the mid-cap market. It is bucking the weak trend, and right now it's managing to move up higher. Days high pretty much on that stock. Then on the large cap screen, HUL is trying to sort of, mitigate some of this negativity. That stock's also turned positive, and it's trying to climb higher in the green as we speak. Deven Choksi is with us. Deven, good afternoon. Let me actually ask you about HUL. I mean, given all the gloom and doom talk around us, has a stock like HUL corrected enough for valuations to start looking comforting again? And how would you approach the FMCG space?
Yes, good afternoon. Well, obviously, I think one level of confidence is high at this point of time, because the kind of economy in which we are currently, the consumption is likely to get larger amount of boost. And should this particular thing turn to reality in the near future, I would think that the FMCG companies would probably have relatively better times going forward. In the last quarter, the companies have actually, suffered to an extent as far as their sales concerned, largely because of some amount of GST rationalization which took place. Having seen that part, probably one should be seeing a steady performance coming in the subsequent quarters. At the same time, uncertainty in the market continues, and that is where people are buying some amount of defensive ideas. FMCG and IT, would figure in that particular list for the time being. So that's where the support will probably be seen in many of the FMCG counters, including HUL, ITC, where relatively the opportunity for an up move going forward next 2 years, 3 years, would be relatively more predictable, more steady. And that's where one is arguing for keeping the stocks in the portfolio, and falling market could possibly be a better time to buy at a corrected valuations.
Okay, Mr. Jan, there was a block deal in Apollo, but your thoughts on the stock? It's surging as we speak, up 7%. Apollo Tyres.
See, it's difficult to say that what has led to this or who have been this thing, but I think that we have been in fact keeping the positive view on the tire stocks going forward. In fact, we have been giving buy call on these all stocks for the last couple of weeks when the Brent fell to a low of about $60 to $63, and that is seen to be quite positive. I agree that the auto OEMs are seeing the tepid sales, but that is the time to buy the auto ancillary also, because in case of tire companies, they will be having the margin expansion, and the replacement market is seen to be quite big for them. And even if you see the OEM sales getting cut by about 10%, which is seen to be a temporary phenomenon. Probably things may start picking up or down the couple months down the line. The things with the valuations also have taken quite a knock, whether you talk of MRF, C8 Tire, JK Tire, Apollo Tires or any other tire company. So yes, by and large we have been keeping, but specifically for Apollo Tires, probably the reason is not known. But I think that it won't be improper for any investors, those who have been holding Apollo Tires, to shift from maybe Apollo Tires to MRF or maybe CRT at the current level, or maybe Balkrishna Industries, maybe exit or book profits in Apollo Tires at 207, 208 and look to buy these three stocks, that is MRF, Balkrishna Industries or C8 Tire at the current level.
Okay, all right. So that's a view on some tire stocks in the market. There is no let-up in pressure. The bulls are pushed to the wall today. 11,705 is the definition of that wall, at least for the time being. Days low on the screen. Let's take a break. We'll come back. The conversation continues. And we will also get chatting with our alpha manager of the day, Harish Krishnan of Kotak Mutual Fund, joining in.